So this is the monthly for Jack. You're currently sitting around its POC down here on the month. So if we're encompassing data all the way back to 1997, the POC is 1724, currently trading at 1853. Let's zoom in a little bit and get at least with the recent times. That localized low on here, 1663, and then we wicked a little lower at 1653. Just in general, here's your weekly chart. Kind of trying to put in some level of a base of a reversal here. In general, I don't hate a name like this if you are an investor. Specifically if you're an investor, because this ain't good. This is a drop, right? So if you're an investor and you want to scoop up a potential diamond in the rough, right, with a pretty tight stop, because even if you want to consider what I say was 16 something, right? The POC back to 1997, 1739. You could even just risk recent lows. That recent low, we kind of made a double bottom here on the month, 1653, 1663. So even if you risk 1650, let's run a risk analysis and see if we got in today, we risked 1650, what our risk would look like. So let's get in today, 1650 stop. Assuming our entry is currently at price. And let's assume, let's look at a conservative gain here. Basically right around here, 21, we'll call it 21 even. You got a wick here, decent little resistance there. So $21 even seems like a decent resistance. So let's be fair, again, leaning more on the conservative end of things. And this is near term, right? So our risk to return ratio is 1-to-1. Like I said, that's kind of what I like to look for. It's a little bit over 1-to-1, which isn't more in your favor, obviously. Again, would be more for an investor. Now, I will say, looking at the daily chart, it looks not good. It looks like it's going to continue lower. You have this green star here, so if the green star pushes lower, you're probably going to break even lower here. If you want to be mega patient, let this come down again, and now you can look at your entry maybe down here, 1740-ish. And I move this to 1717, and now your risk to reward is like almost 3-to-1. This, as an investor, if you like Jack in the Box and whatever, probably an okay idea. As a trader, you're going to want to keep a tight stop on this one. For a fall like this, so this is the daily chart. This was almost $50 9 months ago. This is one of those names where I'd want to actually dig into their fundamentals a little bit more closely and see what's justifying this fall. Because you also had earnings right here on early August, sold off afterwards. So I'm going to want to take a peek. Earnings prior to that, hard fall as well. I'm going to want to take a peek into their books here, specifically on this name, to get a better idea, because there could be something else kind of lying beneath the surface here that we're not necessarily seeing on the chart. So as an investor, there's opportunity here with risk, with a managed stop. But if you're not careful, this name could have a reason that's falling this much. It's falling pretty hard, right? There could be a reason behind that. So this is one of those names where I would personally heavily suggest you consider looking a little bit deeper into fundamentals and seeing if there's a reason why. Now, with that being said, you are building some level of a base down here. There's higher volume down here, so we're seeing more people becoming active down at this price level versus on the fall. Now, you're selling on higher volume too, but that higher volume is still substantiated down here as we built some level of a base. So there is some level of truth to it kind of holding and trying to build some level of a base here before getting a reversal. So I don't hate it for that regard from a technical basis, but there's no doubt on the daily here, it's looking like it could stay bearish, especially below the 50 MA. And on the weekly here, again, it's trying to hold this POC, but it is in a downtrend. It is consistently in a downtrend on every chart we're looking at here. As an investor, I'll keep saying, if I took a deeper look, I might be interested because the risk reward's not awful. Especially if you're looking to get back to like $50 eventually, then it's fantastic, right? But sometimes you find companies like this that are beaten down and they are good brands, and those are my favorite kinds. I love buying fantastic, recognizable brands when they're on sale, because those brands, especially if they've got a bad business model, they got some mud or something happened negatively, they can be swept up and bought out a lot of the times. There's some flexibility there because the branding's strong. The product is good, the branding's strong, and it's on discount. I don't hate those companies. With that being said, this market cap at its current evaluation is only 350 million, so it is a smaller cap company. So keep that in mind. That also puts them into that conversation of being bought out. What if, again, I'm just throwing out a name, it probably won't happen, but what if McDonald's wants to buy out Jack in the Box? Guess what? They buy it today for market value, 350 million. They buy it at, maybe they buy for 2x market value. It now goes for $36 a share. Just looking at market cap, right? So keep that in the back of your head. When you see a strong brand beaten down, it has a good product, and even if they might have their financial issues, those opportunities are rare, but when they come, they tend to work out pretty well. Walgreens was a good example for me, where I took advantage of Walgreens when it was on the low and they went private, right? Because you could have Jack in the Box go private as well and buy out their shareholders at a better price, essentially. So there are opportunities just like that. If you're patient, you just have to kind of wait and not buy when it falls like a little bit up here, but wait for when it's really in the doldrum, it builds out a base, and then you might consider a stake in a company like Jack.